Hey guys, welcome to our channel. I'm Sanat Kumar from simplefxonline.com, and on today's video guys, I'm going to show you in real time how you can scalp anywhere between 30 to 50 pips on a daily basis using both the automated way and the manual way, so that regardless of whether you are an experienced veteran or someone who has just started out who still doesn't understand the world of automated trading, you can still make the most out of the situation on a daily basis. So in a nutshell guys, I'm going to reveal or walk you through all of the process involved from start to finish, so that you can right away get started with applying it on the demo account, and from there onwards everything is left to your preferences, because that is what makes up the world of trading, right? Like, you can find something to suit your personality in this sector, and all you have to do is mess around with it so that you can find your sweet spot. As always guys, before we dive on to the details, just know that I use this software, which is the Droid, to spot these opportunities, and this is a free tool as well, which is going to be linked out in the description section below, so feel free to check it out. And with that being said, let us get started with the process. First and foremost guys, we need to understand that in order to find the best trades for the day, you always need to be prepared. So by prepared, I mean on a daily basis, you need to know which one is the most volatile asset over there, and if the majority of the move or the bandwidth has already occurred, that also means that you can't make much money on it, right? Like, if an asset is already up by 2%, just think about it for a while. Do you really think there is enough room to make money as a bull? No, right? Obviously, most of the move has occurred, and the likelihood or the odds of another breakout occurring is pretty low, right? So the key to finding 50 pips a day strategy lies in identifying the point of disturbance. So now the obvious question is, what is the point of disturbance? And that is just basically an asset which has already broken above the equilibrium zone, and the easiest way to figure that out is by referring to a currency strength indicator or Finviz. So on finviz.com, as you can see from the screen guys, in the world of Forex, the first two pairs which is way above the equilibrium zone and are currently in a trending market is Australian dollar, Canadian dollar, and even the New Zealand dollar. So basically that means that since majority of the move has occurred, these three pairs are the perfect ones wherein you can find the mean reversion strategies effective. So that is what we need to know on the theory side, and obviously we need to match up our narrative with the chart, but I'm just giving you a framework so that you understand how things work from scratch. So this is the first approach you need to do, which is identify wherein the things are overbought or oversold. Narrow down the field. Now we know that we just have to look into the Australian dollar pairs and the Canadian dollar pairs, right? So that is what we have to figure out first, and then we have to move over to the economic calendar and the charts. So on the economic calendar, as you can see guys, there isn't much to talk about today and even tomorrow. And yes, GDP numbers are going to be out for the Canadian dollar, so lot of volatility is expected, which means as traders it is good for us. And yeah, as you can see guys, the trades which we have placed is already up in profit by around $140, and that is how quick things get once you narrow your field in, which is why I'm doing this live trading with you. Let us just quickly open the charts, and this is the setup I had shared yesterday. So this is just a crypto trade which worked out really well. And just like I mentioned guys, from our initial search, as we narrowed in on the Australian dollar and Canadian dollar pair, this is the one I'm involved with right now, and the first one is the Australian US dollar. And as you can see guys, I have a short position on this pair as well. And if you go to the 1 hour guys, it is a no-brainer as to why I chose that. So basically anyone can easily tell you that the current market structure in the Australian dollar US dollar pair is trending strongly towards the bearish direction, and with this new virus strain and every news, obviously this pair is under a lot of stress. So down is the direction to go. And even on the technical side, if you just focus on the upper band trend line touches guys, you can see that for a long period of time, like you can even go back all the way up to a week and you'll still see the same pattern, which is each and every upper band was immediately dealt with a large order flow, pushing the price back towards the normal zone. So That is exactly what happened here also, and here as you can see in this region, there was a clear double top kind of formation, and both the time guys, momentum tried its best to break above the region, but the volatility outright refused. So here we didn't see any breach, and from there onwards, since the rejection is already in place, even if we keep a very wide stop loss and making ourselves available only for 1:1 risk reward ratios, we can scalp out very nicely, and the kind of profit target here is 20 to 30 pip, and I would start closing or monitoring this trade manually once it reaches 20 pips, because that would amount to what, around $400, which isn't bad. So that is where I will start getting involved with it manually and start placing the trailing stop loss. And looking at the way things are unfolding guys, since this is real time, you can easily follow that along. And just like I said, it's all about finding the things which were spiked up in the morning due to inflow of new orders and then trading it back towards the mean. So that is the thing with Australian US dollar. Tight range, neat market structure, and basically everything you need to know, the softwares and the charts are telling you. The second one is actually pretty amazing because this one has a lot of room for profit, and that is on the Canadian dollar Japanese yen. Here guys, in the last week we clearly saw a trend line break, and from that region onwards the downflow was way too aggressive. But right now see what is unfolding guys. Here also the order flow structure isn't strong enough to breach any kind of significant level soon, and of course there might be, I would say, anywhere between 10 to 20 pips movement towards the upward side, but do not fall for that bull trap guys, because if a move occurs, it is most likely just a stop loss, and eventually it has to go towards the downward direction, because not only on the 1 hour, even on the daily time frame, this is in a very strong downtrend, and that means you should not just focus on the short term time frame. The measure is relative and you need to open up to that. So that's how you do it. And just like I said guys, on the daily it's in a downtrend, on a hourly chart also it's in a downtrend, and of course there is a healthy amount of room for the price to move around, but the channel is pointing towards the bearish direction, which means from the current zone back towards the 88.50, which is in the gap down mark, these are going to be our target. So I got a very good entry because I was basically waiting for the breakout on the shorter time frame, and on the 15-minute charts we can clearly see where the trend line breakout occurred. So a very neat move, and as you can see it in real time guys, a very healthy movement as well. So here also the profit potential is what, from 89.04 to 88.50, that is like 54 pips, which means an amazing day, especially from a day trader's perspective. So that's basically a blueprint on how you can find quick trades with ample amount of profits in the shortest amount of time, along with risk management. It all comes down to picking the direction, targets, and as long as you're realistic about the targets and are monitoring it closely, the data will speak guys. So basically that's what I do on a daily basis, and if you are interested in finding signals like this, subscribe to our channel, because that is the kind of thing we focus here. As always guys, I've linked out to all of the tools I've used in this video in the description section. If you've got any questions about the things we discussed, feel free to leave a comment down below. If you've got any pair which you need me to take a look at, feel free to leave that down below as well, and I will get back to you as soon as possible. Subscribe to our channel to get all the latest updates. See you on the next one.